How's it going, guys? My name is Jared Ace, and welcome back to MoneyMetEish. This is the February MoneyMetEish EasyEquities portfolio review, where we have a look at what the portfolio has done over the last month and dive deeper into each of the three accounts. But before we get into the video, please remember that my videos are meant for edutainment purposes only, as I'm not a financial advisor, this is not financial advice, and this is a blank cup. Blank cups. Put your logo on my cup. For more information about blank cups and how you can work with MoneyMetEish, contact us via email at moneymeteish@gmail.com. Please also give the video a like and share it with your friends to help the channel grow. We start today's video, as always, with the US account. The US account was the account that saw the most action in February, and the account ended the month of love 8.7% higher than it ended the previous month, but a large portion of the account, roughly 10% of the account's total value, is now in cash, after the sale of 3 of our holdings and the purchase of an entirely new holding, and some additional funds allocated to some of the other holdings. This cash will be used to purchase higher conviction companies as I look to overhaul the portfolio into a genuinely long-term portfolio, but more on my thoughts about the overall portfolio a little bit later. The top performer this month was Cloudflare, which gained 29.8% after losing around a third of the market cap in January. The war in Ukraine boosted most cybersecurity companies in the last week of the month as fears of cyber attacks grew. The loser for February was BlackRock, which fell 8% in the previous month. It was amongst the vast majority of stocks which took major downturns in the month as fears of war, inflation, and raising rates took a toll on the broader markets. I said that we had sold 3 holdings, so let me tell you a little bit about that. We sold out of Caterpillar, Jumia, and Waste Management completely in the last few days of February, and here's why. The sales of Waste Management and CAT came over fears of their massive debt and whether they would be able to service that debt while retaining their dividend in a high interest environment where debt will be more expensive to service after the Fed stated its intention to raise interest rates this month. For roughly a decade, the US has had almost 0% interest rates, and taking on and servicing debt has been relatively cheap. This is expected to change going forward with the raising of rates, meaning that debt becomes more expensive to take on and to service. That was before Russia invaded Ukraine, and rumors started circulating that the Fed might hold off on interest rate hikes, but Jerome Powell said this week that there will still be a 0.25% rate hike in March. The other company I sold was Jumia. I sold 100% of the position in Jumia at a massive 50% loss. This loss would have been about half as bad had I sold it when I made the video about Jumia saying that I wanted to sell it, but I was too chicken and I was hoping that a magical Jumia fairy might come and save the company. A hope is not a plan. With the share price falling by 50%, it would mean that at the current share price, the stock would have to go up 100% from its current price just for me to break even. And after the company posted earnings saying that their loss per share had grown and EBITDA had fallen 40%, I have very little trust in the board's ability to execute on their plans, since the plans have changed twice in a year. We're just chalking this one up to school fees. It's just been school fees. We paid this. It's a lesson. We move on. Now let's have a look at the TSAR account. For most of February, the TSAR account was trading between 15 and 20%, which was down about 17% from January. But the account ended February up 10% from its January highs, ending the month up 50%. This is all down to ETFs. I was buying ETFs to transfer into the tax-free savings account on the 1st of March and had bought the Core Shares Global and Signia S&P 500 just before the war started. And they have both been trading down around 20%. When I transferred those funds to the tax-free savings account from the TSAR account, this caused the percentage gain in the account to go up. It just shows you how easy it is to manipulate these numbers. You really shouldn't be comparing your accounts or portfolios with people you see online, especially when it comes to things like percentages. The winner for the account was ShopRite, with the retail giant continuing to dominate the local retail space, gaining 8.7% last month. The loser was Purple Group, who, after running really hard in the beginning of the year for no real reason, has returned to levels below R2.50 per share, down 15.7% for the month. The JSE has seemed to handle the current global chaos much better than most markets around the world. We will have to see how it progresses in the next few months as things like fuel increases and commodity prices go up, which commodity prices going up is good for South Africa, but fuel prices going up is bad for everyone. And now, for our final account, the tax-free savings account. The 1st of March is the day when our annual tax-free allowances get reset, and woohoo, we can contribute again! Yay! 36,000 Rand in your tax-free savings account. If you're lucky enough to be able to transfer it all at once. If you're not, just like us, we do it bit by bit. In preparation for this date, I have been buying the same ETFs that I hold in the tax-free savings account in my TSAR account. On the 1st, I sold out of the TSAR account ETFs, transferred the money into my tax-free savings account, and bought the same ETFs at roughly the same weighting. Other than that bit of movement, the tax-free savings account has been getting absolutely hammered so far this year. It fell 1.2% in February. It's down 14% year to date. It has not been a fun time so far, but this is a retirement account though, and I am nowhere near retirement age, and so really not that concerned right now. I did add a new ETF this month, being the Satrix India Feeder ETF, and I will be looking to build that up to about 5,000 Rand this year. The winner of the month was actually the Signia 4th Industrial Revolution ETF, which was really surprising since the companies that make up the ETF and companies similar to those companies have been getting beaten down rather heavily by the market lately. It was up 3.8% for the month, while the Satrix Nasdaq 100 was the loser for the month, down 0.79%. Another great performer for this month was the Sentio Hikma Sharia General Equity Fund, which gained 3.4% in the month and was the only other bit of green in an otherwise very, very red account. Overall, the portfolio lost 2% of its total value this month, and that 100,000 Rand mark still continues to elude us at present, with the markets continuing their downward march. We're currently down 5% year to date. Sometimes it feels like that 100,000 Rand level is just a sick joke that we'll never actually be able to reach, but we continue on regardless. I will continue with the remodeling of the portfolio as I continue to assess the companies we already own and try to concentrate the portfolio into more high conviction companies while maxing out our tax-free savings account. My thinking is that if I want to build a truly long-term investment portfolio, it's not just something that can be done all at once. I can't just look at a bunch of metrics on a screen and decide whether a certain company is going to be a good company to hold for life, unless I truly, deeply know everything there is to know about that company. I would rather hold ETFs and 5 or 6 companies that I deeply know and understand and believe in, rather than the 17 I currently own that I have a decent idea of what they do, but nowhere near the deep knowledge and understanding in all of them the way that I would like to have. This is and has always been a journey, and I see this as the next step in this investment journey. I'd be curious to hear how your portfolios did in the last month, so let me know in the comments down below. Thanks for watching, guys. If you like this video, please give it a thumbs up, subscribe down below, and share it with a friend. You can also follow MoneyMetEish on Twitter and Instagram, as well as joining us on Patreon and everywhere where MoneyMetEishes are. Thank you, and good night.